Good afternoon, this is Rupert Thompson, Chief Investment Officer at Kingswood Group. It's the 9th of November and I'm now going to run through the key developments of last week and also our views going forward. Well, to be honest, it's been quite a week. Equity markets as of close Friday were up some 7% or so from the previous week. Previous week, if you remember, markets were down 5%, so they more than reversed the decline of the previous week. And today we've got markets up another 5% or so. And today's move, part of it is down to the Biden factor, as it were, and part of it, or the most recent move, is down to the latest news on vaccines. Anyway, starting first with the election. What drove the sharp bounce in markets last week? Well, in a way, you could say it's a bit of a surprise that markets are up so much, just because, what have we got? We've got a Biden win. What did the markets think was going to happen going into the election? A Biden win. He was the clear favourite. So why have markets gone up? Well, I think part of it is that even if Biden was the firm favourite, clearly there was an outside chance that we would end up with a very close result, which was going to be disputed. We've certainly got a dispute, but I think the key thing here is that Biden's size of win is sufficient that, as it were, even if there's a recount of some of the votes, it's not going to change the result. And also in terms of Trump's legal challenges, I haven't really heard of anyone thinking they've got half a chance. So it does look like we are seeing a Biden victory which will be upheld. The bigger surprise really was not so much that Biden won, it was the fact that we did not, or the Democrats did not get a clean sweep of Congress. And essentially what happened was that the Democrats retained the House of Representatives, but with a smaller majority. But it looks like the Republicans have retained control of the Senate. Actually, we've got a rerun of one of the state elections for the Senate, Georgia, on the 5th of January. So this won't be entirely clear until then. But it does look like that the Senate remains in control of the Republicans. And if that happens, that means you've got a divided government. And crucially, what it means is Biden will not be able to implement half of the policies he wants to. I mean, Biden's policies at the end of the day have always been sort of a mixture of good and bad as far as the market's concerned. On the good side, he was planning a large fiscal stimulus, big spending on infrastructure. On the bad side, he's also planning tax rises and also a whole lot more regulation on sectors such as technology. And all of this hasn't completely gone out of the window, but it's going to be very, very watered down if the Republicans manage to retain control of the Senate. So that's where we are. And in terms of which sectors led the gains last week, actually it's the technology sector, for the reason I just mentioned, it reduces the threat of a regulatory crackdown, and also the healthcare sector. So where do we go from here? Well, I think at these kind of times, it's better to step back a little and remember that at the end of the day, what does drive markets? It's the economy. So what's the prospect of the economy over the coming months? Well, the economy has actually held up better than people expected, or it's actually recovered faster than people expected. It's probably a better way of putting it so far. And we had sort of further confirmation of this last week in the States. We had good manufacturing, purchasing manager index numbers, further gain in employment, and all the rest of it. The problem going forward, or the problem at least for the next few weeks or months, is that infections continue to climb in the States. And also they continue to climb in Europe. And the one place where they have actually levelled off a bit is the UK. And I think what this does mean is that the US could, probably to a lesser extent, face some of the problems which Europe and the UK are now running into. And obviously the problem that the UK and Europe have got is that we've got renewed lockdowns, and this is going to have an impact on economic activity. We've seen this in the latest forecast from the Bank of England. They're now going for double dip in the economy in the fourth quarter. I mean, the government does realise that this is happening, and we have seen measures, substantial measures actually taken last week to try and limit the hit to the economy. So we saw the furlough scheme reintroduced and actually extended to March, further hope for the self-employed. And also we had the Bank of England expand its quantitative easing programme by a tune of about 150 billion. So action is being taken, but still at the end of the day, you are looking at a double dip. And the risk is that the states also sees a hit to growth as the latest surge in infections in the states forces increased social distancing measures. Well, the good news here clearly is the news we've had in the last couple of hours that Pfizer's vaccine is effective in preventing some 90% of people from getting the infection, and that's clearly great news. It's a major step forward, but I don't think you should think that it is a silver bullet, which means you sort of suddenly magically return to normal. The fact of the matter is that it is going to take time for this vaccine to be rolled out. It's questionable still how long any immunity will last for, and it's also questionable about how many people will actually take up this vaccine. And finally, just in terms of pure logistics, it's not going to be an easy thing to do, and it has to be said this vaccine actually needs to be stored at ultra cold temperatures, which would just sort of increase the logistical problems. So definitely, a step in the right direction. Definitely, I think what it means is sort of looking into the new year. It means it's all the more likely that we will see vaccines start to be rolled out. And I think what that means is, even though sort of the likes of the UK, Europe, and the US are going to see see challenging times for their economy over the next couple of months or so, into the new year, these economies should, as it were, resume their upward trend, resume the recovery path. And that's good news, no denying about it. In terms of what all this means for markets, well, on the back of sort of today's gains, actually equity markets now up sort of as much as 12% or so in space of a little more than a week. Valuations are at 20-year highs. So I think you have to say that markets are pretty much pricing in sort of pretty much all the good news at the moment from these kind of levels, and it's hard to see them making much further progress. Into the new year, I think it's a different kettle of fish because, as it were, the recovery path should have been sort of re-established for the likes of Europe, UK, and the US. But short term, at least, these markets have come a long way, and even if Biden's good news, you shouldn't forget that actually he is not going to be inaugurated until January the 20th, and in the meantime, we have still got Trump in office and potentially causing a bit of havoc. So on that news, I will hand over and continue next week. Thank you.